Welcome to Accounting 1A. We are going to dive right in and get started with Learning Unit 1 from your textbook, an introduction to business, bookkeeping, and accounting. So I'm going to deal with a couple of the most important concepts in this learning unit. It's always been, I want to say, the only very theory-heavy learning unit in your accounting module in 1A. And it has been challenging for students to memorize and I think understand the context and the place that this chapter has in terms of the rest of the textbook. So that's what I've tried to do on the slides as you work your way through this learning unit, is just highlight and unpack, I want to say, the relevance of the learning unit, but also the most important concepts that you need to be able to understand and obviously explain to us in an assessment. Okay, so this specific slide, not anywhere from your textbook. I will link it to your textbook in the next couple of slides. But in general, we tend to jump straight into the textbook and speaking financial language and speaking accounting. And a lot of the time, I think it's important that we take a step back and ask ourselves, especially if you've had no experience to this module before, I think it's important for us to take a step back and ask ourselves, what is accounting? In general, if we speak accounting and we throw the word around quite often, obviously you doing a module, do we even understand what we are speaking about? Secondly, why do you need to do accounting? So why is it part of your course? Why is it part of your syllabus? And why is it actually such an important component of business in general and of any kind of BCom related qualification? And then thirdly, why do we do accounting the way we do it? And the reason why I ask that question is because a lot of students can get quite frustrated with the specific ways and also the mannerisms or the rules that we adopt and that we teach you throughout this module. And that's why I included this question. So why do we do accounting the way we do it? It's not just the lecturer standing in front of the class explaining things in some kind of weird way and you really don't understand why. There are certain rules and practices that we follow. So it's a bit of a universal language. So it's it's rules that we follow, and that's why accounting is dealt with in the way that we deal with it. Okay, so accounting in general, very, very informal summary for you to get your head around it. Say specifically if you're coming in clean slate, you have no idea what this module is all about. So accounting for you, for first year purposes, we are recording, and with recording we mean writing up as you would in a book. Specific books looks in a very specific manner. We write down financial information in a business, and we do this using, like I mentioned earlier, specific rules and specific practices and a very specific way of doing things. So we record and capture the financial information in a business, and why this is important is because this is the way that we deal with financial information that enables us to understand the finances of a business, to be able to understand finances, interpret the financial language, and ultimately be able to do a lot of projections and assessments about whether the business is A, maybe financially successful, B, financially viable, whether it's worth investing in the business, whatever your reasons are that you'll see a bit later about why you need to look at a specific business. We look at financial performance or financial numbers, I want to say first and foremost, before we look at anything else. And accounting allows us to have that information in front of us. Okay, so obviously down the line, hopefully by the time that you finish with this module, you'll be able to come back and say, you know what, I've now managed to produce financial results so that someone can unpack and say, you know what, this business is doing well or it's not doing well. Okay, so that's why we do accounting. So thirdly, the way in which we do accounting, and you'll see a couple of these words floating about in your learning unit 1, we follow specific international rules. Now that's not too stressed in accounting 1, but if you had to move on to accounting 2 and maybe accounting 3, you'll see these names come across a lot more often. But in first year, we already try and follow these international rules, which is a bit different from if you did this module at school. They're not too fixated on following the international reporting standards, but as you move over to university, we then follow the rules more closely. So the international rules, abbreviated the IFRS, so the International Financial Reporting Standards, you'll see about them in your textbook. We follow a specific system, and the specific system tells us quite a lot about why and how we classify things in a certain way and how we need to go and record them. So that recording, writing down of financial information doesn't just happen individually, and no person can just decide exactly what they want to do with the information. There are specific sets of rules that we follow. So that's why I said on the slide towards the bottom right, accounting is done in a uniform way so that it's easily understandable and comparable. And with that, we mean that if you can look at one business's financial results, you should be able to understand any other business. So it's got the same language, and that's why we actually say accounting is a language. And if you battle with understanding accounting, maybe think about it as the financial language, okay, as you would regard any other language that you speak. Okay, so I want to say the first important thing for me in this learning unit is your users and the uses of financial information. So on the previous slide, I briefly touched on you ultimately moving towards producing financial results. And financial results are useful in various different reasons. And I touched on that. I said you can look at whether the business is viable or not. And that then moves us over into Learning Unit 1, into the users. First, I'm going to just speak about the users. So people that are interested in your financial information. You can read about that on page 4 and 5 of your textbook. So the textbook just summarizes this actually quite well. I suggested that you maybe make a mind map for yourself if you battle with learning theory, just to maybe draw a little picture, maybe something in the middle saying who are the users of financial information. So who are the people that are interested in looking at my financial results. So we refer to those people as stakeholders. I think a term that you'll be getting quite comfortable with. We use it in a couple of modules. The stakeholders just literally means people that have a vested interest in your business. Okay, there's also an activity that I've designed for you to take a look at some users of a real world business. The business that I chose is the Woolworths Group. You have access to their financial results, and you can go and see whether you can identify the users of their financial information. Okay, and then secondly on the slide, over and above our users of financial information, we also have various different reasons why users are interested. Okay, so obviously you have people that want to look at your financial information, but the why would also be important, and you can read more about that on page 5 and page 6. Okay, so this is all still background about why financial information is relevant. So why is it relevant for you to do accounting and understand accounting? Is because financial information that you produce using accounting is relevant for people for various different reasons in the world of business. Okay, next up we are speaking about a section in your textbook that's summarized as external and internal reporting. So just a brief step back to where we ended off. So we spoke about the users, so the different people, stakeholders that are interested in your financial information, as well as the reasons why they might be interested. Okay, so next up we move over towards how do we report financial information. Now, this is a section that from experience students have struggled to understand, because we don't really delve into this a lot deeper than just introducing these things to you that you see in front of the slide. If you are going over maybe doing a second year accounting module, you would deal with these characteristics and elements in a bit more detail. But I'm going to try and still give you some context so that if you read things like qualitative characteristics and you see things like IFRS, then you do understand the place that it has in your textbook. Okay, so we spoke about the users of financial information. In the very first slide, I mentioned that we do accounting in a very specific way. It's not just every lecturer teaching, random numbers on a board, thinking about a system right there in the classroom. We've got a very, very uniform approach that we follow. Okay, and well, in very basics, that approach is guided or given to us by IFRS, which I mentioned earlier is the International Financial Reporting Standards. So every country decides to what I want to say governing body in terms of accounting they want to belong to. In South Africa, we belong to the International Financial Reporting Standards, or we follow the International Financial Reporting Standards. So we follow their guidelines in terms of drafting financial information. So all businesses follow IFRS. So that's also why when we teach accounting at university level, we also teach you, I want to say teach you, the IFRS way of looking at financial information and unpacking and understanding financial transactions and accounting transactions. So the way in which we bookkeep or then record financial information is very much based on a system, like I said, governed by IFRS. You can read more about that on page 8 and page 9. I think it goes into a bit more depth than you really need. But again, if we test you on some of the theory of this learning unit, it is important that you understand, you know, the basic building blocks of why we do things the way we do when you come to the more practical learning units. Okay, so over and above IFRS being a very important role player, like I said, in the accounting field, we also then have certain characteristics that we would follow in a business, and they are called the qualitative characteristics. So it's called qualitative characteristics because it's not based on numbers. I want to say, you know, we all know 1 + 1 = 2 and things like that, and we work with rand figures obviously all the time in accounting. So your calculator is like the most important thing that you'll have. But over and above numbers, we also have certain qualitative characteristics that are very important when we do accounting, and it's things that we have to uphold. It's also something that's governed and regulated by IFRS. You can read more about them on page 9 and 10, but what I have done for you on the slide is just summarize them. They are broken up into 2. You get your fundamental characteristics and you get your enhancing characteristics. Now, on a practical level, we would expect of a first year doing accounting for the first time to just basically tell us what are the characteristics and maybe what do they mean. But if you can appreciate that in reality, these characteristics are used in business, and maybe one day if you end up working in the financial field, your financial results and your numbers and your financial statements need to meet all these characteristics. So they're almost like a bit of a backbone and a bit of a quality control check that at a first year level, you don't practically implement this. You're not going to ask yourself, is this number relevant? Is it faithfully represented? Is it timely? But the way in which we teach you accounting already now, the numbers that you will be working with and the transactions that you will be working with will be timely, will be faithfully represented. Okay, but obviously in reality and business, these characteristics form an incredibly important part of the numbers and the financial results that we need to present. Okay, so I'm quickly going to delve into them just to unpack all of these like six terms that you see on the slide in dark blue and light blue. So your fundamental characteristics first. So your 2 most important characteristics that your financial information needs to have is relevance and faithful representation. Now, in plain, simple English, relevance is kind of exactly what the word suggests. So the transaction, we're speaking about transactions now. So the transaction that you see in front of you needs to be relevant. So it needs to be relevant to the business. It needs to have happened maybe in the time period that you are doing financial information for. So that's kind of the first text box, and it sounds as obvious as it is, guys. I know it's quite a, you may be thinking that it should be something bigger and something huger, but it is actually just as simple. So our transactions, A, they need to be relevant. Secondly, they need to be faithfully represented, which means that they need to be accurate. You need to be able to make an estimation and saying, if you are doing a purchase for a vehicle, do you have an invoice price? Do you have a proper interest rate if you're taking out a loan? So things like that. Do you have the accurate rand information almost to be able to say this is the value of something? Okay. So if you are maybe buying something, you need to be able to, like I just mentioned, know how much it's ultimately going to cost you. Okay, but you can read more on those fundamental characteristics in your textbook. Okay, then secondly, you've got your enhancing characteristics. So they are verifiability, timeliness, understandability, and comparability. So verifiability, I would summarize is that a transaction that you see, you'd be able to verify in a very, very basic way of looking at it. I would say that's something where your source documents become quite important. Can you verify this transaction? Would someone else unpack the transaction the same way as you would? So something to do with that. Timeliness, it needs to happen in the specific time period that you are working in. It doesn't help you having a transaction from 2015 if you are working in the 2021 financial year. Same as it doesn't help you having transactions for the future, but you're actually in the 2021 financial year. Okay, so great. If someone tells you they're going to pay you 2 million Rand in 2 years' time, that's fantastic. It's not really timely because you are always working in a specific year. Okay. And obviously you don't know if it's really going to happen, and it doesn't impact our results in this specific year. And then understandability and comparability, that those two are always for me why we follow IFRS and why I say to you on the very first slide, accounting is done in a very uniform way. So understandability, if we always adopt the same methods and the same approach, we always classify things the same way, there's a level of understandability there. So we can go to different financial years. We just call the years that we work in financial years. So whether it's 2019, 2020, or 2021, we would be able to see, you know what, I classified a vehicle in a specific way in 2019. I would classify it the same way the year after and the year after. Not only in your same business, but also in other businesses in the same sector. You have a level of, I want to say, conformity or uniformity, which increases the understandability of your financial information as well as the comparability, because now you can go and actually understand two businesses' results. Because they use the same method of getting their financial results, you can actually go and compare it a bit easily. And also because you've now done accounting 1 at university in a specific way, those businesses use these same building blocks that we're teaching you to do their financial results. So with a bit of luck and a bit of studying, you'd be able to go out after your first year, go look at a set of financial statements, the one I uploaded to you is Woolworths, and be able to see, okay, I actually do understand what's going on here. Okay, because there's a level of uniformity, there's obviously a level of understandability. Obviously with some technical knowledge, I mean, we don't expect anyone walking on the street to be able to unpack financial results of a business, but with some level of understanding of the area that you work in, you should be able to understand financial results of a business. Okay, so those are your, I want to say, 6 qualitative characteristics of financial information. And like I said, we always really uphold them. And on your level in first year, you don't need to ask the question, is this timely, is this relevant? In reality, in the real world, you would use these characteristics to assess whether you're going to consider a transaction or how you might be able to record something. But it is important for you to realize there are certain characteristics and elements, and I want to say tick boxes, that run in the background of doing financial transactions and recording of financial transactions. Okay, and then next up in your textbook, just briefly touching on the different fields that we get in accounting. Okay, so again, taking you back to the first slide, I spoke about accounting and the way we write things down. It's to enable us to understand the financial results, to enable us to make some decisions, to make some projections. So in that, we then split accounting. It's just for you for knowledge purpose, also quite introductory, so that you know if we say accounting, typically there are 2 fields. Okay, you can read about that on page 12 to 13. Made a note there. The table on page 13 historically has been quite important for you to know and to learn. And I mean, the majority of you will end up doing financial management as a module. And that's kind of, for me, always where the other part of accounting comes in. So in first year, we pretty much teach you financial accounting. So the block on the left, we teach you how to record financial information. We teach you how to understand financial information, how to look at transactions, how to ultimately produce results. Okay, ultimately produce financial information that's useful to someone. That we use in what they call management accounting, and you'll touch a bit on that in financial management. So we take the results and we say, okay, now what does this mean? Okay, so the one is very much historic, and you'll see that in the table on page 13. Financial accounting is very much recording transaction that has happened we look at them, we say, okay, so what happened? How do we record this? What is our profit for the year? Or how much sales do we have? Or how many assets do we own? What is the value of buildings? So it is very much historic, the year that's just gone by. And what does that produce for us? Okay, and if you're sitting there on a specific point where you have these results, you have these financial informations on hand, maybe you give them over to your management accountant and you would say, okay, great. So this is the profit for the year. What did that look like last year? What do we expect to make in a year from now? How does this compare to other businesses in the same sector? So that's why if you look at the little picture in the green which says management accounting, they very much give you a little graph with an arrow. So a bit about future projections. So what decisions do we make based off of the financial results that we have? Okay, and typically also the ones very much internal for internal use. So typically planning ahead, making certain decisions based off of your financial information, and the ones very much for external parties, our stakeholders I mentioned earlier. So we present and say, listen, whoever's interested, this is what my business made in the past year. Okay, and that's your financial accounting. Okay, so then I want to say at long last, we slowly but surely moving over to the more practical side of things. I know most people who enjoy accounting really don't enjoy the theory behind it, but you'll see I've got an activity lined up for you that will help hopefully a bit with a summary of all of this. Okay, so we're moving over to the practical side of things. So the first, I want to say slightly practical thing that we are going to look at is your accounting cycle. The very nice summary of your accounting cycle on page 17 in your textbook. I've summarized it on the slides, and this is a cycle worth knowing. It's a cycle that will make your life so much easier, especially if you're a first-time accounting student, just to understand for the rest of this year, what am I working in? So if I can take you just again a couple of steps back, we've spoken about people that need to see your financial information. We've spoken about accounting being financial information properly drafted up. Things that impact RAND values in our business, things that we use to make decisions. People are obviously very interested in this. We have certain governing bodies regulating how we do this. And I want to say then in comes the how. Yes, how we do it, but how do we practically go and say, I pick up my pen, I take my calculator, now what? Okay, and now what starts on page 17 through page 19 for your accounting cycle. So the process that we follow is, firstly, in any business, we have transactions that happen. Transactions typically happen on a daily basis. I always refer you to grocery kind of stores, someone like Pick and Pay. I mean, transactions happen by the thousands every day. If not millions. So that is a transaction. A transaction, you can look for a definition if you want to know. I think it's worthwhile going and just confirming that you understand what a transaction is. Transaction is basically anything that impacts or will impact the financial status of the business. Okay, so anything that will cause a RAND value change is a transaction. Now, all of those transactions are captured on source documents. We are going to look at source documents in a couple of learning units. Source documents, I mean, think about, again, Pick and Pay example. You go to Pick and Pay, you buy groceries. That's a transaction, okay? Because you give the groceries to the teller, they scan it, you pay, you take your groceries. That's a transaction. The source document comes in where, after you've paid, they give you your till slip. Typically, that little notification that says how you paid. That's a source document. So a source document is just the proof, or I want to say the paper trail of how a transaction happened. Okay, every single transaction that occurs has a source document. Now, it's not always a physical document like Pick and Pay or Clicks or Discam or wherever you bought your lunch, Steers or KFC. It might be electronic as well. So if you've EFT'd someone, you actually have that option on your app that says, do you want to send a notification to someone? That's pretty much a source document. Okay, so we do use electronic source documents as well. I think it would be easier for us to grasp this whole source document concept if every time we get a physical paper. But a lot of the time, any proof of payment, anything like that is a source document. It's literally just the piece of paper physically or electronically that captures the details of your transaction. Okay, and we use that. So we use the source document to then go and journalize the transactions. Okay, and journaling is a very specific process that we're going to teach you guys in Learning Unit 4. It's just a very specific way of writing down the information from the source document. So putting almost it down on another piece of paper. We use a book for this. So we basically, or an electronic Excel spreadsheet maybe if you're advanced. So you'll take all those source documents and you go and write them down. Okay, and you go and capture them. And then from that, you are able to summarize them and draw up what we call a general ledger at the end of every month. So you can see all of this, happen daily so far. At the end of every month, you'll summarize the journal entries into a general ledger. And also at the end of every month, you summarize every general ledger into a trial balance. Okay, now all of these terminologies might sound a bit foreign to you if you've never done accounting before. Don't worry, as we cover every learning unit, you will be introduced by your lecturer to what a general ledger is, to what a trial balance is. But for now, just appreciate this monthly cycle that we follow. Okay, so we have transactions that are captured on source documents. They get drafted into journal entries from source documents. These journal entries get summarized in general ledgers. These general ledgers get summarized into a trial balance. Okay, and that's a monthly process. So it actually, I want to say, runs from the beginning to the end, and then it runs the same way every single month. So this is a monthly process. Okay, so at the end of 12 months, then we will draw up the financial results, actually, the financial statements for the year. So the things that you see if you open your Woolworths annual report that I've also made available to you, that happens at the end of 12 months. Okay, so at the end of 12 months, we draw up the financial statements. Okay, so that's our cycle. That's what we're going to work in for the rest of the year, basically. So we're going to slowly but surely, from Learning Unit 2, understand each of the steps in the accounting cycle. Okay, so in Learning Unit 2, we're going to start off by understanding transactions properly, because obviously you can't really work with them if you don't understand them. So that's kind of our first step. And we're going to teach you how to view transactions. So transactions, it's things like you're paying off the bank loan, you're paying salaries. But what does that mean now? In our accounting language, in our language of finance that we're now trying to teach you to speak, if I say I pay salaries for 500,000 Rand, how do I analyze that? So how do I unpack that? How do I record that? So what is the payment component, the salary component, what is relevant, what is going to increase and decrease in terms of Rand figures? So that's the kind of language that we're going to introduce you to. Things are going up and down, increase and decrease in value. Things are going to be classified. So that's basically what Learning Unit 2, extremely important learning unit, tries to teach you, is how to deal with transactions in this language of accounting. And how do we group them? How do we analyze them? How do we understand them correctly? Okay, and that pretty much finishes off Learning Unit 1. So what I have put together for you to assist you with all the theory that is Learning Unit 1 is a revision activity that's basically pulled from a couple of previous test and exam questions. So I would suggest after you are done in your class with your lecturer and you've covered these slides and you've really kind of delved into your textbook, try and see how you cope with these more multiple choice questions. There are a couple of them. Also see if you can do the matching column, I want to say the statement in column A, can you match it to the explanation in column B, as well as just a bit of a case study about, you are now an accounting student, we're kind of testing your understanding of this. Your friend asks you for a couple of, pieces of advice. You would have dealt with these in your textbook, so can you help her and advise her on a couple of words and terminologies and concepts that she's unsure about? Okay, this entire revision activity, if you want to mark it for yourself, it would be out of 35. Your lecturer would have a memo that they can make available to you.